Hi guys, I'm Karunya Rao and in Ideas for Profit, all eyes on real estate major Macrotech Developers, also known as Lodha, which tried for an IPO for the third time but still received a lukewarm response with the issue barely managing to get subscribed. Now remember, Moneycontrol Pro was among the very few who recommended subscribing to it, backed by strong conviction about its execution capability, intent to create value for shareholders, experienced management, good balance sheet, leading position in the industry and of course opportunities in the real estate sector. We also like the valuations. The IPO was offered at almost a 50% discount to its intrinsic value, and the stock more than doubled within a few days and captured most of the value gap which was available post-listing. Currently, it's trading near its net asset value, which is in the range of 1,000 to 1150 rupees per share. While the stock may not offer a great upside in the near term, we believe long-term investors who intend to ride the growth in the domestic real estate space could remain invested here. This is probably one of the few real estate companies to have the capability and management which can leverage the growth and create value in the long run. Moreover, the growth levers are in place and its initiative on many fronts like reduction in debt, monetization of huge land banks and resolving some of the sticky issues pertaining to overseas operations and SEZ should sustain strong momentum. Lodha has significantly reduced leverage post the IPO. It has repaid a debt worth 3,641 crores, utilizing close to 2,000 crores from the IPO proceeds. Also, the promoters have repaid the entire loan taken from the company to the tune of 1,600 crores. Overall, consolidated debt to equity has reduced from 4.3x in March 21 to about 2x. Owing to these measures, Lodha's credit rating has improved by 2 notches to India ratings BBB+. Lodha's cost of debt has reduced by 70 basis points to 11.6%. The company aims to continue debt reduction, aiming to bring down the debt to 10,000 crores by the end of this fiscal, which would lead to significant strengthening of the balance sheet and further reduction in interest costs. The cash flow generated during the fiscal would be directed majorly towards debt reduction. For residential projects which form a bulk of Lodha's revenue, the company is looking at Joint Development Agreement route, also called JDA. Now, JDA route is an asset-light strategy and they typically require low investment by the developer. Lodha aims to sign JDAs worth 8 to 10,000 crores every year. Lodha aims to carry out such projects in areas of MMR and Pune where it has a strong understanding of the market. Carrying out projects in western and eastern suburbs of Mumbai, Navi Mumbai, as well as in those areas of Pune where it has relatively low presence will improve its overall position in these markets. Similarly, Lodha aims to monetize its land assets worth 3,800 acres situated in Palava and Upper Thane with a focus on building digital infrastructure. Lodha's equity contribution will be in the form of land and hence no further capital will be required to pursue future growth opportunities. Lodha's 830-acre Palava Logistics and Industrial Park at Taloja is witnessing strong traction. Since the 90-acre development JV with reputed firm ESR in 2019, Lodha has already monetized 275 acres of the industrial park till date. The company aims for an outright sale or joint venture for development of this park. Now moving on to the London market. London has seen inquiry levels surpassing pre-pandemic levels, signaling a return of confidence in this market. Lodha's 2 projects in London are on track, with the company expecting to complete Lincoln Square in the current fiscal year, while Grosvenor Square is expected to be completed by FY24. Lodha aims to realize cash flows about 1,500 to 2,000 crores post the debt repayment over the next 3 years. As per the management, residential property prices have started rising after a gap of 6 to 7 years. There's an increasing demand for homes during the pandemic, as we all have seen it. People working from home have been investing in properties for that extra space. Meanwhile, owing to the pandemic, Tier 2 and Tier 3 smaller developers have been facing liquidity issues, which would result in an advantage for bigger, organized players like Lodha. Residential properties in major cities have seen reduction in inventory, leading to an increase in prices. Lodha's project in Palava has witnessed a price increase of about 4% in Q1 FY22. Also, the company expects price increases to happen in its South Mumbai projects by about 5% in the current fiscal year. The uptrend in prices would enhance the profitability and cash flows for the company.